But let's move over to charitable giving as a tax strategy tool. So for many clients, giving is a values-driven first idea for them and premise. But with the right structure, it can also help manage taxes.
Right. In our one big, beautiful tax bill, a number of charitable rules have changed, started in 2026 as well. One of the headline items is now the new above-line charitable deduction for people who do not itemize. Not everybody itemizes, Ryan, because they don't have enough taxes and charitable giving and other types of things to put them in that itemized income. Itemized deductions. This one is single filers can potentially deduct $1,000 of cash gifts to public charities, and married couples can deduct $2,000, subject to the rules, even if they use the standard deduction, which allows, to get a little piece of the pie from the itemized deduction section.
Yeah, so that's something a lot of people listening, the vast number of people now, since the standard deduction has increased so much, since the Trump tax cuts took account before 2020, before, and then they've got reenacted here just recently. Even less people itemize. So and therefore, this is something to make sure you take advantage of that what's called the above the line deduction. That's something that you can take advantage of, as Jamie said, even if you are taking the standard deduction. Make sure you don't lose that. So there's a new floor for itemizers. This is kind of getting the weeds, but there's only a portion of your charitable giving that exceeds 0.5% for your adjusted income. Gross income will be deductible. And for very high income earners, the value of your itemized deductions, including charitable gifts, is capped at 35% of your benefit.
Right.
So there's a little bit of, if you got questions about that, that's the reason you need to call in and talk to you.
Right. I mean, although 35%, that's a good amount depending on what your income level is, but they're also not going to let you give 100% away to reduce your taxable income to
Correct.
zero. So that's why the standard deduction helped a little bit, the increase in that. I believe it was 2018. Yeah. One other thing, we have qualified charitable distributions are another very important tool. If you're at least 70 and a half, you can give directly from an IRA to a qualified charity. That donation can satisfy all or part of your required minimum distribution. It does not show up as taxable income, Ron. For 2026, the QCD, qualified charitable distributions limit, rises to $111,000.
And we're talking about that a lot in our office, and we're conducting those. It's a conversation we're having. A lot of people in our that we work with are they've given for years to a charity that's close to their heart or to their church. It has to be a nonprofit. It has to be an official charity, an official nonprofit to qualify. So that's something to certainly consider, and it can be very beneficial. But for high net worth households, another thing is donor advised funds, and they can be very, very effective. What you do is you give cash or appreciated securities to that fund, and you get a deduction in that year if you qualify, and then you can grant money out to charities over time. So you can put it in that fund, but then you can get the deduction in that year, and it separates the timing of that tax deduction from the timing of the gifts.
Right. I mean, that flexibility comes especially valuable in years when your income spikes. That's not all the time, but you may have those years where that does. You might choose to bunch several years of giving into one tax year in order to itemize and get more value from your deductions. Then use the donor advised fund to support charities steadily in the following years.
Yeah,
then that goes against your 35% cap too. We've still got to think about that as well. And again, come giving, that's in your plan and your strategy to make sure we take advantage of as much as we can.
The key is planning. And so if you know your giving goals and your income picture, we can work with your CPA or give you a call and to determine whether the strategies like QCDs, bundling, or donor advised funds make sense.